Welcome to another deep dive. Today we're tackling the crypto roller coaster.
Yeah.
We've had some pretty positive things happen on the world stage lately.
Right.
But prices haven't gone wild like some predicted.
Yeah.
Plus, there's that rumor going around about the White House stocking up on Bitcoin turning orange, as some are calling it.
Uh-huh.
Buckle up, because we're about to unpack all of this and more.
Okay.
We'll be looking at the forces at play in the crypto world, especially here in the U.S.
Right.
We've also got big news from Kentucky and an update on the CEO of Telegram.
Interesting.
Plus, Ripple and Binance are shaking things up in Dubai.
Mm-hmm.
So whether you're prepping for a big meeting, diving deep into crypto research, or just curious about what's happening in this fast-moving world, we've got the insights you need.
Right.
Let's kick things off with a quick snapshot of the crypto market today, March 17, 2025.
Okay.
It's not exactly a day for celebrating when you look at the numbers, but there's always more to the story, right?
You're absolutely right. It's easy to get caught up in the daily price swings, but we want to understand the why behind the numbers, not just the what.
Mm-hmm.
For example, we've recently seen the Bitcoin Strategic Reserve signed into law by Trump, and the Crypto Summit generated a lot of buzz.
Right.
These are events that, on the surface, seem like they should be sending prices sky high.
Right.
Yet here we are.
It's almost like everyone's waiting for the other shoe to drop.
Yeah.
What's holding things back?
Well, one factor is the sheer amount of hype and misinformation circulating, particularly on platforms like LinkedIn, and surprisingly, even in mainstream media.
Huh.
There seems to be a real misunderstanding of the purpose of this strategic reserve.
Okay.
Many people believe it means the government is actively buying Bitcoin, when in reality it's more about holding existing government-held Bitcoin and potentially accepting Bitcoin for tax payments down the line.
So the strategic reserve isn't designed to directly pump the market, but that's not the narrative many people have latched onto.
Exactly, and that's a perfect example of how a misleading narrative can create unrealistic expectations and ultimately affect market sentiment. For anyone looking to seriously invest in crypto, separating hype from reality is crucial.
I completely agree. So are there any specific metrics that are ringing alarm bells for you?
One area of concern is the low stablecoin volume, which is currently around $52.65 billion.
Okay.
Now, this is a significant drop from previous months, and it suggests a lack of liquidity and overall market participation.
Mm-hmm.
To give you some context, when stablecoin volume is high, it often means that investors are moving funds around and getting ready to make trades.
Right.
When it's low, like we're seeing now, it can indicate a lack of confidence and a reluctance to engage with the market.
So a low stablecoin volume could be a sign that people are sitting on the sidelines waiting for clearer signals?
Precisely.
Mm.
And this hesitancy is also reflected in the DeFi space.
Okay.
We're currently seeing DeFi volume under $5 billion, which is relatively low compared to previous periods of high activity. DeFi, or decentralized finance, relies on smart contracts and blockchain technology to offer financial services without the need for traditional intermediaries.
Right.
This sector was booming not too long ago, so the current low volume might be a sign that investors are becoming more cautious or perhaps exploring other opportunities within the crypto ecosystem.
That makes sense. Now, you mentioned earlier that decentralized exchanges, or DXs, seem to be dominating, but you also hinted that the numbers might be deceiving.
Yes, that's a crucial point. While it's true that DXs are showing strong growth, we need to be cautious about assuming that this automatically reflects a shift in investor preference. There's a possibility that centralized exchanges, or CEXs, are manipulating the numbers to make the situation appear more favorable than it actually is.
That sounds a little shady. How would they even do that?
Well, CEXs still control a significant portion of the market, and they have the ability to influence trading volume through various means. They can incentivize traders to move their activity to DXX while simultaneously reporting inflated volumes on their own platforms. This creates the illusion of a thriving DX ecosystem, which can be misleading for investors who rely on those metrics to make decisions.
So it's essential to look beyond the surface and consider the potential motives behind the numbers.
Absolutely, and this brings us to another intriguing point.
Okay.
PancakeSwap, a DX that operates on the Binance Smart Chain, is currently exhibiting unusual dominance.
Interesting.
Now, this in itself isn't necessarily cause for alarm.
Right.
However, when we consider the recent $2 billion investment Binance received from Abu Dhabi's MGX, it raises the question of whether there might be a connection.
You think this massive investment could be influencing activity on PancakeSwap?
It's certainly a possibility. While we don't have concrete evidence, it's worth considering that Binance might be strategically directing resources and perhaps even incentivizing users to trade on PancakeSwap. This could artificially inflate the platform's volume and create a perception of dominance. Now, it's important to note that this is speculation, but it's a valid question to ask when we see such a significant investment followed by unusual activity on a related platform.
All right, let's shift gears and focus specifically on Bitcoin.
Okay.
The price has been relatively stable, but with the Federal Reserve meeting coming up, everyone's wondering what impact their decisions might have.
Right.
Can you walk us through the potential scenarios?
Of course, the Fed's upcoming decision on interest rates is being watched closely by everyone, not just crypto enthusiasts.
Yeah.
There are a few key possibilities. If the Fed decides to raise interest rates, it would signal a move to combat inflation.
Okay.
This could potentially put downward pressure on risk assets like Bitcoin, as investors might shift their funds towards more stable investments like bonds.
So a rate hike could spook the crypto market, at least in the short term.
It's certainly possible, on the other hand, if the Fed chooses to reduce interest rates, it could be seen as a stimulus measure aimed at boosting economic growth. This could potentially have a positive impact on Bitcoin, as investors might perceive it as a more attractive alternative to low-yielding traditional assets.
So a rate cut could be a good thing for Bitcoin, right? But what if they just leave rates unchanged?
That's the third scenario.
Okay.
And it's often the hardest to predict the market reaction to.
Right.
If the Fed decides to maintain the current interest rates, it could be interpreted in various ways.
Okay.
Some might see it as a sign of stability, while others might perceive it as a lack of decisive action. Ultimately, the market's response will depend on a complex interplay of factors, including investor sentiment, economic data, and of course, how the media chooses to portray the Fed's decision.
The media's interpretation can really make or break the narrative, can it?
It absolutely can, and this is a crucial point for anyone following the crypto market. You see the actual fundamentals of Bitcoin, its technology, its adoption rate, its underlying value proposition. These things are important, of course.
Right.
But often the market reacts more strongly to the narratives surrounding those fundamentals. And who shapes that narrative?
Yeah.
The media plays a huge role.
So even if the Fed makes a decision that objectively should be good for Bitcoin, the media could spin it in a negative light and scare investors away.
That's precisely what we've seen happen in the past.
Really?
Remember back in December of last year when the Fed actually did reduce interest rates? Logically, this should have been a positive sign for risk assets.
Right.
But the media spun it as a sign of...
Solid advice. Now let's circle back to that White House turning orange rumor.
Yeah.
It's a juicy story, but it also seems to completely contradict the whole purpose of the Bitcoin Strategic Reserve, doesn't it?
You're right. It does seem counterintuitive. After all, if a government were to actively buy large amounts of Bitcoin, wouldn't that essentially be trying to pump the market, which, as we discussed, is not the stated purpose of the Strategic Reserve? Exactly.
So where did this rumor even come from?
The source of the rumor is an article published by Decrypt, a reputable crypto news outlet. The article cites unnamed attendees of a closed-door conference who claim that Hines, the executive director of the Presidential Working Group on Digital Assets, mentioned the administration's intention to acquire more Bitcoin.
Okay.
Now, it's important to note that this information is based on secondhand accounts and hasn't been officially confirmed by the White House or any government representatives.
So essentially, it's hearsay at this point.
That's a fair assessment. It's certainly possible that the administration is considering acquiring more Bitcoin. But until we have concrete evidence or an official statement, it's best to approach this information with a healthy dose of skepticism.
Right. We don't want to get caught up in speculation and make investment decisions based on unverified rumors.
Exactly.
Yeah.
It's always wise to wait for confirmation and rely on credible sources for your information. Now, that being said, it's not impossible that the situation could change.
Right.
The crypto world is dynamic and things can shift quickly.
Yeah.
So while we shouldn't take this rumor as gospel, it's something to keep an eye on.
Okay.
If there are any further developments, we'll definitely cover them in a future deep dive.
Great. Now let's move on to some more concrete good news.
Okay.
Over in Kentucky, they've just passed a bill that's being hailed as a huge win for Bitcoin. Can you tell us more about it?
This is a very exciting development, and it's part of a larger trend we're seeing across the U.S. Kentucky's new bill includes provisions specifically designed to protect self-custody of Bitcoin, which means individuals have the right to hold and manage their own Bitcoin without relying on third-party custodians.
Okay.
It also has provisions that support and encourage Bitcoin mining operations within the state, creating a friendly regulatory environment for this growing industry.
Uh-huh.
And what's particularly impressive is that this bill was passed unanimously, which really signals strong bipartisan support for Bitcoin and its potential benefits.
Wow, a unanimous vote. That's pretty remarkable. It seems like Kentucky is really embracing the crypto revolution.
They certainly are, and they're not alone. We're seeing more and more states across the U.S. taking proactive steps to create crypto-friendly environments. They're recognizing the potential economic benefits of attracting Bitcoin businesses, fostering innovation in the blockchain space, and providing their citizens with more financial freedom and opportunities.
It's almost like a state versus federal tug of war is developing with crypto as the rope. On one hand, you have states like Kentucky embracing Bitcoin and creating a favorable environment for its growth.
Right.
But on the other hand, you have the potential for federal-level roadblocks, as we discussed earlier with the White House rumor.
That's a very astute observation.
Yeah.
The dynamic between state and federal regulations will be a key factor shaping the future of crypto in the U.S.
Right.
It'll be fascinating to see how this plays out in the coming years. Will we see a more unified approach, or will the crypto landscape continue to be fragmented by varying state laws and federal uncertainty?
Right.
That's a question we'll continue to explore as the situation evolves.
All right, let's shift gears again and talk about Pavel Durov, the CEO of Telegram.
Okay.
He was arrested in France a while back, but has recently been released, at least temporarily, and is apparently relocating to Dubai.
Yes, Durov's situation has been quite a roller coaster ride, and it's had a noticeable impact on Telegram-related tokens. After his arrest, we saw a significant price surge in these tokens, likely driven by speculation and uncertainty surrounding the future of Telegram.
Right.
Now his release and relocation to Dubai have introduced another layer of complexity to the situation.
And Dubai, of course, has been making headlines for its crypto-friendly stance.
Right.
It seems like Durov might have found a welcoming environment to rebuild and refocus.
Dubai has definitely positioned itself as a global hub for crypto innovation and investment, attracting entrepreneurs, developers, and investors from all over the world.
So Durov's move to Dubai could be a strategic one, both personally and for the future of Telegram.
Potentially, yes. But it also raises some important ethical and investment considerations. We've seen how a single individual, in this case Durov, can have a disproportionate influence on the value of a token.
Right.
This highlights the risks associated with centralized control, even in a decentralized world.
Yeah.
It's something for investors to be mindful of when considering Telegram-related tokens or any other project heavily reliant on a single figurehead.
It makes you wonder what could happen if something were to happen to that central figure. The entire project could be thrown into disarray.
Exactly, and it's not just Telegram we need to think about.
Right.
Consider Bitcoin, for example. While it's often praised for its decentralization, there's no denying the influence that someone like Michael Saylor, the CEO of MicroStrategy and a prominent Bitcoin advocate, has on the market.
Right.
What would happen to Bitcoin's price if Saylor were suddenly unable to continue his advocacy?
It's a thought-provoking question. It really underscores the importance of diversification and not putting all your eggs in one basket, so to speak.
Absolutely. Diversifying your portfolio across different crypto assets is crucial, and so is understanding the underlying factors driving a token's value. Don't just chase hype or blindly follow influential figures. Do your own research. Assess the risks and make informed decisions based on your own investment goals and risk tolerance.
All right, let's shift our focus back to Dubai and talk about some major players making moves there. First up, we have Clearstream, a subsidiary of Deutsche Börse, which is now offering crypto custody services for Bitcoin and Ethereum.
This is a significant development, and it signals growing institutional demand for crypto assets. Clearstream is a major player in the global financial system, and their entry into the crypto custody space lends further legitimacy to the industry.
Right.
It suggests that institutional investors are becoming more comfortable with the idea of holding crypto assets, and they're seeking trusted and regulated custodians to manage those holdings.
So this is a positive sign for the long-term growth and adoption of crypto, right?
It's certainly a step in the right direction. However, it's important to remember that custodial solutions, while convenient, come with inherent risks.
Okay.
When you entrust your crypto assets to a custodian, you're essentially giving up control over your private keys.
Right. Not your keys, not your Bitcoin. It's a mantra we hear often in the crypto community.
And for good reason. While custodians like Clearstream offer security and peace of mind, they also represent a single point of failure. If something were to happen to the custodian, a hack, a regulatory seizure, even bankruptcy. Your assets could be at risk.
So it's a trade-off between convenience and control. Investors need to weigh the risks and benefits carefully before deciding whether to use a custodial service or take on the responsibility of self-custody.
Exactly. It's a personal decision, and there's no right or wrong answer, but it's a conversation worth having, especially as institutional adoption of crypto continues to grow and custodial solutions become more prevalent.
Now for some truly groundbreaking news out of Dubai, Ripple, the company behind the XRP cryptocurrency, just secured the first ever blockchain payment license from Dubai's financial authority.
Oh.
This is massive considering Ripple's already strong presence in the region and Dubai's ambition to become a global crypto hub.
This license is a major milestone for Ripple, and it could have far-reaching implications for the wider adoption of blockchain technology in payments and settlements. It allows Ripple to offer its cross-border payment solutions to a broader range of financial institutions and businesses operating in Dubai and beyond.
So this isn't just about Ripple expanding its business. It's about Dubai positioning itself at the forefront of the global financial revolution.
Exactly. Dubai has been very strategic in its approach to crypto regulation and development. They've created a welcoming environment for crypto businesses, while also implementing robust frameworks to mitigate risks and ensure compliance.
Right.
And this approach seems to be paying off.
Yeah.
We're seeing more and more crypto companies setting up shop in Dubai, attracted by its favorable regulatory environment, its strategic location, and its ambition to become a global leader in this space.
It feels like a domino effect is starting with Dubai potentially leading the charge. Could other financial centers around the world follow suit and start implementing similar pro-crypto policies?
It's certainly possible Dubai's success in attracting crypto businesses and fostering innovation in the blockchain space is likely to catch the attention of other jurisdictions looking to remain competitive in the global financial landscape. We might see a race to the top, with countries vying to create the most attractive regulatory environments for crypto companies and investors.
Now for another bombshell out of Dubai, Binance, the world's largest cryptocurrency exchange by trading volume, just secured a staggering $2 billion investment from Abu Dhabi's MGX.
Wow.
And get this, rumor has it that the entire amount was paid with a single check.
The sheer scale of this investment is remarkable.
Yeah.
It speaks volumes about the confidence that MGX, a prominent investment firm with a focus on technology and innovation, has in Binance's vision for the future of finance. It's also a testament to the growing maturity of the crypto industry, as traditional financial players are increasingly willing to make substantial investments in this space.
And this isn't just a random investment. MGX has big plans for integrating AI, blockchain, and traditional financial systems.
Right. They see Binance as a key player in this vision.
Exactly.
Yeah.
MGX is known for its strategic investments in cutting-edge technologies, and they clearly see the potential for blockchain to revolutionize the financial industry. Their partnership with Binance could lead to the development of innovative financial products and services that leverage the power of blockchain technology to enhance efficiency, transparency, and accessibility.
It's a bold move that could have far-reaching implications. And speaking of bold moves, we had an intriguing question from one of our listeners, Brian, during our recent Asking Me Anything segment. He wanted to know, if the White House officially buys Bitcoin, how would it impact the global cryptocurrency market?
That's a great question, Brian, and it's one that's been on a lot of people's minds lately, especially with all the rumors circulating. As we discussed earlier, I personally find it unlikely that the White House would make such a purchase, at least not in the near future.
Their stated purpose for the strategic reserve is not to pump the market, but rather to manage existing government-held Bitcoin and explore its potential for tax payments.
So the administration's current stance doesn't seem to align with the idea of actively buying Bitcoin to influence the market.
Exactly. However, it's important to acknowledge that things can change and policies can evolve.
Right.
So for the sake of this hypothetical scenario, let's imagine that the White House does decide to make a significant Bitcoin purchase.
Okay.
What could happen? Well, it would undoubtedly send shockwaves through the crypto market.
You think it would be that big of a deal?
Absolutely. A move like that coming from the U.S. government would be seen as a major endorsement of Bitcoin's legitimacy and its potential as a store of value and a viable asset class. It could trigger a massive wave of institutional investment, as fund managers and corporations who were previously hesitant might suddenly feel compelled to allocate a portion of their portfolios to Bitcoin.
I can already imagine the headlines. White House goes Bitcoin bonkers. Bitcoin to the moon.
You're probably not far off. The media frenzy would be intense, and the price of Bitcoin would likely surge significantly.
Yeah.
Now, whether that surge would be sustainable in the long term is a different question, but in the short term, there is no doubt that such a move would have a profound impact on the market.
That's fascinating, but you also mentioned earlier that you personally believe it's preferable for individuals rather than government entities to hold Bitcoin. Can you elaborate on that?
Certainly, my perspective stems from the core principles of Bitcoin itself: decentralization, individual sovereignty, and freedom from government control.
Hmm.
One of the key strengths of Bitcoin is that it operates independently of any government or central authority.
Right.
It empowers individuals to control their own finances and transact freely without interference.
So you see government involvement as potentially undermining the very essence of Bitcoin.
In a way, yes. If governments start accumulating large amounts of Bitcoin, it could create a situation where they have significant influence over the network and potentially even the ability to manipulate the market.
Yeah.
It also raises concerns about privacy and surveillance, as governments could potentially use their holdings to track and monitor Bitcoin transactions.
That's a perspective worth considering. It highlights the importance of keeping Bitcoin in the hands of the people, so to speak.
Precisely. The power of Bitcoin lies in its distributed nature, in its ability to empower individuals and foster financial freedom.
Mm-hmm.
And while government involvement might seem like a positive development on the surface, it's crucial to consider the potential long-term implications for the core principles of Bitcoin and the crypto ecosystem as a whole.
It's definitely something for our listeners to think about as they navigate the evolving landscape of crypto and its intersection with governments and institutions. It's a complex and fascinating dynamic, and one that we'll continue to explore in future episodes.
It really does make you think, doesn't it? If even something as seemingly decentralized as Bitcoin can be influenced by individual actors, what does that mean for other projects and the crypto space as a whole?
It definitely highlights the need for due diligence and a deep understanding of the factors at play. But hey, that's what these deep dives are all about, right?
Yeah.
Equipping you with the knowledge to navigate this exciting and sometimes bewildering world.
Precisely. Knowledge is power, especially in the fast-moving world of crypto.
All right, let's take a step back and recap some of the key insights we've uncovered today. We started by dissecting the current state of the crypto market. We saw those positive events on the world stage, but also noticed that prices haven't reacted as strongly as some predicted.
We then delved into the fascinating world of narratives and how the information or misinformation surrounding an event can often be more impactful than the event itself.
Right.
Remember the example of the Bitcoin strategic reserve?
Uh-huh.
The facts were there, but the public perception, fueled by hype and perhaps even some intentional manipulation, painted a different picture.
That whole discussion really highlighted the need for critical thinking and not just accepting everything you read at face value,
Right.
especially in the crypto space where information spreads like wildfire.
Couldn't agree more. It's essential to be discerning, to question the sources, and to dig deeper to understand the nuances.
Then we had that fantastic news out of Kentucky, a state embracing Bitcoin, protecting self-custody, and even supporting miners.
That's right.
It's a clear signal that the winds of change are blowing and some states are ready to ride the crypto wave.
Kentucky's proactive approach is definitely encouraging.
Yeah.
It shows that governments are beginning to recognize the potential benefits of embracing this technology. And it'll be interesting to see if other states follow suit, creating a sort of domino effect across the U.S.
Imagine a map of the U.S. slowly turning orange state by state now. That's a narrative I could get behind.
I see what you did there. You're catching on to the power of narratives.
But speaking of individuals making waves, we also talked about Pavel Durov, the CEO of Telegram, and his recent relocation to Dubai. It's a reminder that even in a decentralized world, individuals can still exert a significant influence.
Durov's situation raises some fascinating questions about the balance between centralized leadership and decentralized technology. It also highlights the potential risks for investors who might be placing too much faith in a single individual.
And that led us to a broader discussion about diversification and the importance of not putting all your eggs in one basket, so to speak, whether it's Telegram, Bitcoin, or any other crypto project. Understanding the underlying factors driving value is essential.
Absolutely. Diversifying your portfolio and conducting thorough research is key to mitigating risks and making informed investment decisions.
Then we shifted our focus to Dubai, a city that's quickly becoming a global crypto hub. We saw Ripple securing that groundbreaking blockchain payment license, a major milestone for the company, and potentially a catalyst for wider blockchain adoption in the region.
Ripple's achievement is significant. It demonstrates the growing acceptance of blockchain technology by traditional financial institutions and governments. And Dubai, with its forward-thinking regulatory approach, is proving to be a fertile ground for crypto innovation.
And who could forget that massive $2 billion investment Binance secured from Abu Dhabi's MGX? That single check, if the rumors are true, speaks volumes about the growing confidence of the crypto industry and Binance's role within it.
It's a testament to the maturation of the crypto space and the recognition of its potential to transform the financial landscape. MGX's investment, along with their vision for integrating AI, blockchain, and traditional finance, suggests a future where these technologies converge to create a more efficient, transparent, and inclusive financial system.
And finally, we tackled that thought-provoking question from Brian about the White House potentially buying Bitcoin.
Right.
We explored the potential market impact, the media frenzy that would likely ensue, and the broader implications for the principles of decentralization and individual sovereignty.
It was a hypothetical scenario, but it forced us to consider the complex relationship between governments, institutions, and the crypto ecosystem. It's a relationship that's still evolving, and one that will undoubtedly continue to shape the future of this space.
It's like we're witnessing the early chapters of a really compelling story. We can see the characters, the setting, the emerging plot lines, but the ending is still unwritten.
And that's what makes it so exciting, isn't it? The possibilities are vast, and the potential for disruption and innovation is immense. But as with any good story, it's important to pay attention to the details, to analyze the motivations of the characters, and to think critically about the direction the narrative is taking.
Well said. Now, before we wrap up this deep dive, there's one more fascinating area I want to explore with you. It's a niche within the crypto market that's gaining traction and has the potential to bridge the gap between the digital and physical worlds.
I'm intrigued. Tell me more.
We've talked about Bitcoin, stablecoins, DeFi, even meme coins, but have you ever heard of decentralized physical infrastructure tokens, or DPI for short?
DPI, I've come across the term, but I must admit I haven't delved too deeply into it. It sounds intriguing, though. What's the story behind these tokens?
They're fascinating, and they represent a different kind of value proposition within the crypto ecosystem. Unlike many crypto assets that primarily exist in the digital realm, DPI tokens are tied to real-world physical assets and infrastructure.
So we're talking about things you can actually touch and feel, not just lines of code on a blockchain.
Exactly. Think of data storage, computing power, renewable energy projects. Even physical commodities like gold or real estate DPI tokens offer a way to tokenize these assets, allowing for fractional ownership and potentially creating new avenues for investment and participation.
That's a powerful concept. It takes the idea of tokenization beyond just digital assets and extends it to the physical world. It could have huge implications for various industries, from infrastructure development to supply chain management to access to resources.
Precisely, and that's what makes DPI so exciting. It's not just about speculation or trading, it's about connecting the blockchain to the real world and unlocking new possibilities.
So it's like building a bridge between the digital and physical realms using blockchain technology as the foundation.
A perfect analogy, and this bridge has the potential to be incredibly transformative. Imagine a world where you could invest in a solar farm in Africa, or a wind turbine in Europe using crypto tokens. Or imagine being able to track the provenance of a product from its origin to your doorstep, all on a transparent and immutable blockchain.
The possibilities are truly mind-boggling. It has the potential to democratize access to resources, empower individuals to participate in infrastructure development, and create more efficient and sustainable systems across various industries.
It's a vision worth exploring, and that's exactly what we're going to do. Let's dive into the DPI space and uncover some of the key players, the challenges they face, and the potential impact they could have on the future.
Lead the way. I'm eager to learn more.
All right, let's start by looking at some of the leading DPI projects based on market capitalization. At the top of the list, we have Bitensor with a market cap of $2.93 billion. Now, Bitensor has been described as the Ethereum of AI, which might sound a bit hyperbolic, but it gives you an idea of their ambition.
The Ethereum of AI. That's a bold claim.
Yeah.
What exactly are they trying to achieve?
Bitensor is essentially building a decentralized network for AI development and deployment. Think of it as a platform where developers can collaborate, share resources, and create AI protocols without being reliant on centralized tech giants.
That's fascinating. We've all seen the power and potential of AI, but we've also seen the concerns about its concentration in the hands of a few powerful companies. A decentralized approach to AI development could level the playing field foster more innovation and ensure that the benefits of AI are more widely distributed.
Exactly. And that's the core vision behind Bitensor, right? They want to create a more open, transparent, and accessible AI ecosystem, one that's driven by the community rather than controlled by corporations.
It was a noble goal, and one that aligns with the ethos of decentralization that we've been discussing throughout this deep dive. It'll be interesting to see how they tackle the challenges of building such a complex and ambitious network.
Challenges are inevitable, but the potential rewards are enormous. Now, let's move on to another major player in the DPI space, Filecoin, with a market cap of $1.85 billion. Filecoin is focused on decentralized data storage. Think of it as an alternative to those giant centralized cloud providers like Amazon Web Services or Google Cloud.
Decentralized data storage. That's a hot topic these days with all the concerns about data privacy, security, and control.
Absolutely. People are becoming more aware of the risks associated with storing their data on centralized servers controlled by corporations or governments. They're looking for alternatives that give them more control over their data and ensure its privacy.
And that's where Filecoin comes in.
Precisely. Filecoin utilizes blockchain technology to create a distributed network of storage providers, allowing users to store their data securely and redundantly across multiple nodes. This eliminates the single point of failure that exists with centralized providers and gives users greater control over their data.
It's like taking the power back from those data giants and putting it in the hands of the people.
Exactly, and it's not just about individual users. Filecoin has the potential to revolutionize data storage for businesses as well, offering them a more secure, transparent, and cost-effective alternative to traditional cloud solutions.
It's a compelling value proposition, and the market seems to agree, judging by Filecoin's impressive market cap. Now, is there a third player in the DPI space you wanted to highlight?
Yes. There's one more project I want to introduce you to, Render Token, with a market cap of $1.64 billion. Render Token is tackling a different but equally important aspect of the digital world computing power. Specifically, they're focused on decentralized GPU rendering, which is essential for a wide range of applications, from gaming and video editing to scientific research and AI development.
GPU rendering, now that's getting into some technical territory. Can you break it down for us non-techies?
Of course, GPUs, or graphics processing units, are specialized electronic circuits that are incredibly efficient at handling complex calculations, particularly those involving visual data.
Right.
They're the workhorses behind those stunning graphics you see in video games, movies, and other visual applications. Okay.
But GPUs are also essential for tasks like machine learning, data analysis, and scientific simulations.
So they're kind of like the brains behind a lot of the cool stuff we see and use in the digital world.
Exactly. But here's the thing. GPUs are expensive, and not everyone has access to the high-end hardware needed for demanding tasks. And that's where Render Token comes in. They're building a decentralized network that allows individuals to share their unused GPU resources and earn rewards in the process.
It's like creating a global marketplace for computing power, where anyone can participate regardless of their location or access to expensive hardware.
Precisely, imagine a world where a student in a developing country could contribute their laptop's GPU power to a scientific research project and earn crypto in return. Or imagine a small business being able to access the computing power they need for complex tasks without having to invest in expensive infrastructure.
It's a brilliant way to democratize access to computing power and unlock the potential of underutilized resources. It's also a testament to the power of blockchain technology to facilitate peer-to-peer collaboration and value creation. And it's just one example of how DPI tokens are bridging the gap between the digital and physical worlds, creating new possibilities, and empowering individuals to participate in the emerging digital economy.
These DPI projects you've highlighted, Bitensor, Filecoin, and Render Token, they're just the tip of the iceberg, aren't they? The DPI space seems vast and ripe with potential.
You're absolutely right. What we've discussed today is just a glimpse into the world of DPI. There are countless other projects out there, each tackling a different aspect of the physical world and exploring the potential of blockchain technology to revolutionize how we interact with our surroundings.
It's a space worth watching closely, wouldn't you say? It has the potential to fundamentally change how we think about ownership, access to resources, and the role of technology in our lives.
I couldn't agree more, and I have a feeling we'll be revisiting the DPI space in future episodes as this sector continues to evolve and mature. But for now, I think we've given our listeners a solid introduction to this fascinating and potentially transformative area of the crypto world.
It's incredible to think about how far crypto has come. You know, we started with Bitcoin, this purely digital concept, and now we're talking about tokens that represent physical assets, renewable energy projects, even access to AI.
Mm-hmm.
It really speaks to the boundless potential of this technology.
It's mind-blowing, isn't it? It feels like we're on the cusp of a massive paradigm shift where the lines between the digital and physical worlds become increasingly blurred, and DPI is right at the forefront of the shift.
And what's particularly exciting is that it's not just about disrupting existing industries, it's about creating entirely new possibilities.
Hmm.
Imagine a world where individuals can directly invest in and benefit from infrastructure projects around the globe,
Right.
or where access to essential resources like energy or data storage is no longer controlled by centralized entities.
It's a vision of a more equitable and decentralized future, one that's powered by blockchain technology and driven by individual empowerment.
Precisely. And while there are undoubtedly challenges ahead, both technical and regulatory, the potential benefits are too significant to ignore.
So where do we go from here? What are the key trends to watch in the DPI space, and what advice would you give to someone who's interested in exploring this sector?
The DPI space is evolving rapidly, so it's crucial to stay informed and adapt to the changing landscape.
Hmm.
One trend to watch is the increasing integration of DPI tokens with other blockchain ecosystems.
Okay.
We're seeing projects that combine elements of DeFi NFTs and even gaming with DPI, creating hybrid models that offer unique value propositions.
So it's not just about isolated DPI projects anymore. It's about creating interconnected ecosystems where different blockchain technologies work together to unlock new possibilities.
Exactly. Another important trend is the growing focus on real-world utility, and impact investors are becoming more discerning
Mm.
and are looking for DPI projects that go beyond just tokenizing assets
Mm.
and actually offer tangible benefits to society, such as supporting renewable energy initiatives, improving access to education or healthcare, or even addressing climate change.
That's encouraging. It means that the focus is shifting from pure speculation to creating real-world value and making a positive impact.
Precisely. And for anyone interested in exploring the DPI space, my advice would be to do your research, start small, and focus on projects that resonate with your values and your investment goals. Don't just chase hype or blindly follow the crowd.
Solid advice. It's the same principles we've been emphasizing throughout this deep dive: critical thinking, due diligence, and informed decision-making.
Absolutely. And remember, the crypto world is still in its early stages, and the DPI sector is even younger.
Mm-hmm.
There will be volatility, there will be risks, but there will also be tremendous opportunities for those who are willing to learn, adapt, and embrace the unknown.
Well said. And speaking of embracing the unknown, it's time for us to wrap up this deep dive into crypto trends, geopolitics, and the fascinating world of DPI.
It's been an incredible journey exploring the current state of the market, uncovering hidden trends, and even venturing into hypothetical scenarios that challenge our assumptions and force us to think critically about the future.
We've covered a lot of ground today, from analyzing the impact of global events and media narratives to dissecting the nuances of government regulations and institutional investment. We even took a detour to Kentucky to celebrate their bold embrace of Bitcoin.
And along the way, we introduced our listeners to the intriguing world of DPI, showcasing its potential to bridge the gap between the digital and physical realms and create a more equitable and decentralized future.
We hope you, our listener, walk away from this deep dive feeling informed, empowered, and perhaps even a little inspired to continue exploring the vast and ever-evolving world of crypto.
Remember, the crypto world is a dynamic and complex ecosystem. It's constantly evolving, presenting new challenges and opportunities. Staying curious, informed, and adaptable is key to navigating this exciting landscape.
And most importantly, don't be afraid to ask questions, challenge assumptions, and think for yourself. After all, that's what makes you a true learner and a valuable member of the crypto community.
Thank you for joining us on this deep dive. Until next time, keep exploring, keep learning, and keep pushing the boundaries of what's possible in the world of crypto.
And as always, stay curious. Thanks for listening.